Hey, there we go. Happy New Year, everybody. It is 1 minute before 5:30, but I think that's okay. But I am excited to be in the new year. It's been a chill day, a very relaxed day. And I'll be honest, when 12 o'clock came, last night I was already in my bed. I looked at my husband. I'm like, oh, what time is it? He's like, oh shoot, it's already 12. He was watching the football game last night. Shout out to Georgia because we won, right? But today, what we're going to be doing and covering are currency pairs going into the new year because that is what we are here for. And so I'm happy that you guys are here, here on TradingView and then here on YouTube. So that makes me happy. That makes me excited. So and thank you for the guy who asked how I'm doing. I'm doing well, actually. I'm doing very good. And for my students, if you guys are in here, hey, I missed y'all. I'm excited for this new year with everything that we're going to be doing. So I'm just getting everything up and ready. So let's go ahead and let's get into it. I wanted to actually go live yesterday, but I was chilling with the family and we were busy. And I was like, you know what? Now we got to switch it to January 1st. But it's actually good because the markets are closed today, which means they're closed tomorrow as well. Nothing is moving on the price chart. And that's exactly what I wanted. I didn't want to, hey, Miss Joy, I didn't want to worry about price moving at all. And I'm actually glad that the markets are closed so we can really see what's going on from 2022 to 2023 and take our time. So we're going to be on here for about an hour because my husband cooking pot roast and I want me some good old pot roast. Okay, I'm going to get that pot roast, curl it with a good movie, and then I'm good for the day. All right. Now, before we get into the charts, let me go over a few things. I hope all of you guys have trading plans. I know. Hey, Diana. Hi. How you doing? Hey, FXSA. I am a stickler for trading plans, like following your rules. And we're going to go over like a little synopsis of my trading plan and how I plan to trade for the new year as a swing trader. But I have to give this disclaimer, you guys. This is not financial advice. This is just my personal view of the market. But one of the things that I'm hoping for, especially for this year, is really that you guys really take initiative to be your best self, to be your best trading self on your trading journey, to become the expert. That's my biggest hopes for you guys for 2023. So after we go over the trading plan, we're going to do some top line analysis on some currency pairs, and then I'll take a few questions, and then I'm going to get to my pot roast. All right. So if you guys don't know me, if you're new to me, my name is Shaquan, and I am a swing trader. I recently just started to scalp the market again. I started back in December, and it's been going pretty well. I actually ended the year with a really good scalp on S&P 500. I'll be talking more about my scalp trades this year as well, and inviting people to live trade with me. I've actually invited my students to come and live trade with me in December, just so they can see how I adjust and how I use my TMP strategies across the board on just trading quickly, trading the system quickly. And it's been working out pretty well. But if y'all don't know, I started trading going on this year, 7 years ago. And I got good at teaching. I wanted to keep teaching. I want to keep teaching, but I'm actually learning it's best to keep trading more than teaching. So this year is really going to be geared towards more live trading, more risk management, more portfolio management. And so I'm really interested and glad in the direction that we're heading because it's going to make a lot of sense going into this new year. Now, my 10 strategy, let's talk about that really, really quick. My 10 strategy has 3 steps. And within those 3 steps, it's like 3 sub steps, right? It's always steps in between steps when it comes to trading. Nothing can really be so straightforward, right? But the first thing that I like to focus on, and maybe you should focus on as well, is trend. I'm a bit stickler and not plotting structures first. Structures like support and resistance or trend lines or indicators. I don't believe in plotting that first. I like a naked price chart. I don't know if it's just me, but I think a naked price chart is so sexy. Like when you can actually just see what price is doing and how it's moving. I like to look at it as a first impression. That just says it all to me, right? And once I see that flow, that's how I know if a currency pair is going to be for me really, really quick. And so I'm looking for a visual uptrend or downtrend. You guys are going to see me do that today. Now, once I identify that a currency pair is moving in an uptrend or a downtrend, I go to say, hey, well, since this pair is in an uptrend or this pair is in a downtrend, now I'm going to focus on my entry, right? I'm only looking for one entry. I'm not looking for multiple levels. I'm not looking for a bunch of trend lines. I'm not looking for any of that. I just need one place to enter. After I get that, I'm going to scope out my stop loss, my take profit, and my break even point. Now, the stop loss I think is very important. For me, the stop loss basically says a few things. One, I need to be okay with where I'm going to put my stop loss and where I'm going to place my take profit, because obviously that's going to give us our risk to reward. But at the same time, what the stop loss does is it says, Shaquan, if price after you enter this trade goes to your stop loss, your trade is invalidated. That means that the setup is no longer valid. I think this is a part that tells me if I'm wrong. I think for some traders, they have a stop loss, but they only limit the stop to saying that I lost money, but not to reevaluate. I think it's important to let the stop loss tell you what to do after you're stopped out. And so that's why I have here that it invalidates my setup. Then I have my break even point, and you guys are going to hear me talk about my break even point in a little bit when we're actually on the price charts, because the break even point will make a lot of sense with what I'm going to be talking about, okay? Because I think there's like a multiple break even points. You have a break even point to where you can move the trade to break even, to where you lose no money. But my break even point is going to have a little bit more of a criteria with it, okay? Last but not least, I'm setting pending orders, right? You guys are going to see me look at trade setups where I'm going to set a buy limit order or a sell limit order. And you guys are going to hear me talk about when I have to enter a trade manually. Now, last year, I focused on pending orders. Guru, I pray I'm saying your name right. Hi. Okay. Hey, I see you texting me here on YouTube. I want you to know that I do see you. Obsidian, I pray I'm saying your name right. Hi. Is this for a novice like me? I trade for any type of person, whether you're new, whether you've been trading for a few years, or whether you've been trading for decades. I think when it comes to trading, with the way I teach, it's literally like a conversation, right? It's a conversation between you and I, and we're just sitting here chatting it up, right? So that's what it is. Hey, Veronica, how are you, sweetheart? So yeah, I want you guys to also to understand that every trade I mention here, that doesn't mean that I'm going to take the trade, because here's a few things. Some trades that we have may set up, right? They may actually meet all the rules and we get to enter. Some may invalidate themselves before I even get to enter the trade, which is why we have to take our time with our analysis and know what we're going to get into before we get into it. Now let's talk about my trading style. I'm a full-time swing trader who's scalping again. Okay. I started off as a scalper. A couple years after that, moved towards swing trading. I've been swing trading for like the past 2 to 3 years. Now I'm doing a mixture of both. But for right now, tonight, we're going to talk about swing trading. So if you don't know what a swing trader is, or if you're looking to swing trade, a swing trader is a person who holds a trade for more than 24 hours. Some hold their trades for a week, months, or whatever the case may be. I hold my trades based on market conditions. Okay, it's based on volatility. That's something that I have to teach later on in the year, but volatility basically means the momentum of price action. Like how big is the trend, how small is the trend. And that basically tells me how long I'm going to hold the trade for, right? So once I understand what my swing trade is and the market condition, then I look at my risk management. I risk no more than 1% per currency pair. So that could be me breaking down the 1% per pair. It could be me breaking down the 1% per sections of pairs that I'm trading, or it literally could be 1% per currency pair, right? And I only enter into trades that are more than a 1-to-1 risk to reward. I don't have a stickler rule for having a 1-to-2 risk to reward or a 1-to-3. I just need a 1-to-1. Now, when it comes to me taking profits, this is how I'm taking profits this year. I'm actually glad one of my students, Sydney, you guys have actually seen her on my YouTube channel. She's like a psychology coach for Forex traders. I love the direction that she's going in. But she mentioned that she was listening to Mark Douglas, God Rest His Soul. And he was saying to take partials along the way, right? To your take profit. Now, normally what I've been doing was once price reaches my break even point, when price gets 50% of the way to my take profit, I would normally just move the trade to break even. But now what I'm going to do is once price reaches 50% of my take profit, I'm going to take off half of the trade, meaning I'm going to move it to break even, take off 50% or take a partial of my trade and let the rest run to my take profit. That way I'm locking in profits. This is going to help my psychology and help my account, right? And so this is literally the part of evolving as a trader now, thinking risk management through a little bit more in detail, right? Because since trading is 50-50, we honestly don't know what's going to happen. But I think the biggest thing for trading for me this year is literally taking the profit, not trying to be right 100% of the time, because that could result in a bigger loss or in more losses, thinking that every trade is going to go to the take profit. I don't know if it's going to happen, but I don't want to bake on that, right? So let's talk about the higher time frames really quick as well. So I'm looking at the monthly, daily, and the weekly time frames wherever I'm analyzing. Please keep in mind that the higher in time frames you go, the longer you may be holding your trades. I think sometimes a lot of traders come into the market and they think, well, I'm on the higher time frames. I can just go down to a 1 hour or 15 minute and trade these higher time frames. Not necessarily, because it may not align with the trades that you're going to take in the direction that you're trading. Your trend continuations or cycles could be out of order. And so the higher in time frames I'm going, they're literally going to be painting a picture as I go from the monthly, weekly, and daily. And you guys will see me do that as well. Now, I want you guys to follow along with me as I am analyzing my currency pairs. I already have them analyzed. I'm just going to explain them to y'all, right? So the biggest thing that I want y'all to take away first is, what direction do you believe price is trending in? Hey, Mr. Hayden, how you doing? Specify the trend in the time frames, like as we're going, right? Because I can't see y'all, I can't talk to y'all. Normally on Sundays I'm in Zoom sessions with my students, so I can't see y'all right now. As a matter of fact, Mr. Hayden just said, hey, he's actually one of my students. I can't see him, right? So as I'm going through it, follow along with it. Chat in the description what you guys think, what the trend is doing on the time frames that we're on. And then specify the range that you would enter the trade in. Like, where would you enter the trade? Where would your take profit go? Where would your stop loss go? And if at any time, like in this section, if you guys have a question about the pair we're on, ask it. That's what I'm here for. I'm here to answer the question. All right. Now, risk management is personal to everybody in here. Everyone won't have the same answer to this, but how would you manage a trade that you're in? What is your risk percentage? I don't believe in entering trades based on lot sizes first. I believe in having a risk percentage and letting the trade tell you what your lot size will actually be. That's why the stop loss is probably one of the most important factors or elements in your risk management strategy. Okay, what is your break even rule? And if price stops you out, what does that mean? Because you guys are going to hear me talk about that. Okay. What's up, Gamaliel? What's up, baby? Hey, Kyle, what's going on? So let's go ahead and let's head to the actual price charts. Once again, the markets are closed today, right? So if y'all looking to see why the markets ain't running, because honey, it's a holiday. Thank God for holidays. That's a really nice break time. All right. So prayerfully you guys are enjoying y'all's. Now, prayerfully you guys can see my screen. I pray you guys can see my screen on YouTube. All right. If you guys are here on TradingView, prayerfully y'all can see it still too. Okay, I've moved over to my price chart. So we're gonna start here on the dollar index. Now, I want y'all to notice something here. I am using a broker called 8cap through my prop firm, the Funded Trading Plus. Okay, I use FTP. That's my prop firm. I'm going to switch over to the dollar index. This is through TradingView, because there is a big difference that I would like you guys to notice here. And that is that on TradingView, the dollar index, which measures the strength or the weakness of the dollar, has made a new lower low. But if we come over here to 8cap, it doesn't look like we've made a new low yet. Now, I want you guys to understand that when you are using different brokers, your price action candlesticks will not look the same. So this is something that I want you guys to be cautious about, because you may say, well, Shaquan, price did this on my exchange, but price did this on yours. And that's because I'm using a different broker. All right. Mr. Hayden or Kaya, could y'all put the platform that we use, the prop firm that we use, please, in the chat if y'all don't mind? Okay, we use the Funded Trading Plus over here, or FTMO. Some people in my group use FTMO, or some use my Forex funds. Right? It's really a personal preference. Now we're going to start here on the monthly time frame, okay? Now the monthly time frame on the dollar index for 2022, I want y'all to notice what price has been doing. Price was bullish for the fair part of 2022. And the reason why we know this is because the candlesticks kept going up, 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 up until October. And the end of 2022, we started to see price decrease. And we can see that price had a lot of momentum. There was an inside bar between December and January. Inside bars are basically like, if y'all see here, we had a bearish month in December, but then the buyers came back, and this is the momentum candle and push price up, right? And then here in May, there was also another bearish month, and this is when you're thinking, oh, price is going to end up going down, and the buyers were like, no, homie, we going back up, right? And they pushed price back up again. So inside bars are normally typically candlesticks in between momentum candlesticks. Okay, so you got a bullish month, bearish month, bullish month, and vice versa if price was going in a downtrend. Okay, but now this is what we need to break down when it comes to top down analysis. Top means the highest time frame that you're on to analyze price action. So I'm on a monthly time frame. It's the highest time frame I'm going on, right? Now, what I'm going to do is say, okay, January closed bearish. Well, we're not January. December closed bearish. November closed bearish. October closed bearish. But what does that mean for me and for you going into January? Is this an index that you need to pay attention to? Because remember, this indice helps you trade the major currency pairs: AUD, USD, New Zealand dollar, Euro, USD, Pound, USD, USD CAD, USD Swiss, USD JPY, right? So now we got to go top down a time frame to break down the fluctuations, the flow of the market. So I'm only going to go over this flow primarily, but when we break those bigger candlesticks down that happened in 2022, do y'all see how now we're seeing more fluctuations in the market that you did not see on the monthly time frame? This is why breaking your time frames down are going to matter in top-down analysis. How can I see the information better that I did not see on that higher time frame? All right. So if you look here, higher low, higher low, higher low. We can see that the lows kept getting higher: 101.19, 104.48, 107.46, 114.87 is the highest that the dollar index went in 2022. And now you can see that the first reversal, or the first sign of price going down, the sellers coming back in, was once we passed 107.46 and we reversed, right? So now that I see that, and when we saw that in my group, it's like, okay, this is going to change the way we trade our majors and what we are looking at and how the price is going to flow, right? So now y'all can see just here in this area, we're not going to look all the way left. We don't need to look at all the way left right now. We need to look at this area right here. This is what I call high volatility, because now price is just going down, 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 down without the fluctuations that look like this. Price is just flowing down. Now I want to break down the most recent current price action. So we're going to go to the daily time frame, and we're just going to look a little bit deeper to see what's going on just in these fluctuations here. Y'all can see that we're getting lower lows, lower highs. We have another lower low right here, lower high, lower low. And remember what I just showed y'all on TradingView on the other dollar index, that price actually did make a new low, which means this highest wick right here is the new lower high, right? Now, with my new broker, I can actually trade the dollar index cash. All right. I can trade this if I wanted to. So if I wanted to trade this, first I'm going to look at the trend. I just explained we are in a downtrend, right? I can see the absolutely visually fluctuate. I'm just going to use all the leagues, right? But I can see the flow of price. It is beautiful. I call this a pretty area because I don't have to second guess what price it's doing. It's in a downtrend, right? Now, if I wanted to enter the trade, I already have my structure placed. I use what I call estimation zones. And zones just basically say that I am estimating that price can pull back here for me to enter a trade, for me to sell back down to the previous low and further in this downtrend. So now all I am waiting for is for price to pull back to my zone. Give me a bearish candlestick if I'm going to enter manually. I could enter this as a pending order as well. Like I'll put my pending order to the bottom of my zone here, and then I can sell back down to the low. But I don't think I'm gonna get a 1-to-1. Will I? Oh, there it is right there. I don't even need this right here. All right, so I can get a 1-to-1 if I set this pending order 1.13. And that is the trade setup, literally just that quick, right? Breaking it down from the monthly, weekly, daily time frame. If I believe that price can continue going down in trend continuation, right? That is TMP. Simple system. I know the trend. I know where I want to enter the trade. I know where I want to exit the trade. Stops are going to go back to the high. I am done. All right. Now, let me talk about the difference between the pending order and the manual order really, really quickly, okay? If I entered this as a manual order, what that means is that I have to show up to enter the trade. I would enter this on a daily time frame. So that means that I would have to wait for price to pull back to my zone. My candlesticks that I enter on when price pulls back to the zone is 5 o'clock p.m. Eastern Standard Time. Because I live in the United States, I'm on the East Coast. Price closes at 5 o'clock p.m. So if I get a bearish candle here and it's 5 o'clock p.m., I'd have to enter the trade. The only thing that I would not know is what the risk to reward will be. I would still have the same stop loss. I would still have the same take profit. The candlestick just affects what the risk to reward can be. It can be higher. It could be lower. All right. But all in all, you guys, this is how I'm looking at the dollar index, straight downtrend. All right. Now, with that being said, let's go ahead and let's take a look at the other currency pairs as well. And hopefully you guys were able to follow along with that, because that is how I'm also going to be looking at my other currency pairs as well. All right. Let's go ahead and get into AUD USD, because there are actually a few things we need to take a look at on this pair, even as it relates to the dollar index. So let's start here on the monthly time frame. Same situation. Now, I want y'all to keep in mind something that's really important. I do not look at my monthly time frame every single week. I only look at my monthly time frame every first of the month, right? One of the reasons being is because, y'all, it takes a full month for one candlestick to close. I don't know how much of a change is going to happen in that 1 month. Then a weekly time frame, I look at it once a week. The daily time frame, if I have to look at it, it could be daily. Obviously, it's a daily time frame, right? But just keep in mind, I'm not showing up to the same time frames every single week or every single day, right? Because you'll drive yourself crazy doing that, and I honestly think that it's wasted energy. Hey B, how you doing? Hey Grover, how you doing as well? Happy New Year to y'all both. But on the monthly time frame, y'all can see that for 2022, AUD USD was actually really bearish. I mean, I got some really good trades out of this currency pair this year. I think I traded this pair and New Zealand dollar a lot this year. And they made me some really good money, right? And I'm praying that it can continue going on into 2023. But my main focus still is the way we're moving here. Recently, we've gotten some really big bullish movement, and this is really what I want to break down. I don't want to break down the full price chart because just from these few candlesticks alone, we're going down. Yeah, it went up, but we went down. And these are even more inside bars. Hey, Curtis. The same thing I was telling you guys that was happening on the dollar index. I want you to look at what's going on. We had a bearish month. Bulls came back into the market or buyers came back into the market. Boom. Push price down, right? Bulls coming into the market. This is when a lot of new traders think, oh, price going to go up. We're going to start buying. But then boom, price goes right back down. And you have to start to ask yourself, well, what does this fluctuation look like? You can see the candles on this time frame, but what does it actually look like on this high time frame? Once again, this is where top-down analysis comes into play. So if I take you guys to the weekly time frame, this is where you could get a different story, right? If y'all look here, and this is from April, I'm just going to start here. Price was at a high peak, but then we went down. We made a new low. Price pulled back. Lower high, price drops again, lower low, price pulls back, lower high, price pulls back, lower low. So technically for AUD USD, we are still in a down trend, all right? Because price is still trading below 0.71366. And in order for us to be in an uptrend, a validated uptrend, price needs to push past 0.71366. So all of this bullish movement has just been a counter trend or a pullback against the downtrend. All right. I get asked a lot of times, I'm told a lot of times from traders when I do consultations or I talk about trading to some of my students is sometimes they're confused in the trend cycle. They're like, well, I bought, but then price went down, or I sold and then price went up. Why? And this because of something called a trend cycle. You have to look at the overall flow of price like we just did. Price in a downtrend, right? But then somebody may say, but Shaquan, on the daily, price is in an uptrend. And I'm like, well, if we really categorize what's really going on the price chart, price in a downtrend, but we're experiencing a pullback or a retracement or a counter right now. So technically, we're just pulling back against this uptrend. That's all we're doing, right? So what I want to do is break this area down now, because the question is, how far can price pull back if we're going to keep pulling back, or will price continue down in a downtrend? So let's go ahead and let's look at that. Let's go to the daily time frame here, okay? So I want to break down the flow of price that just happened here. So from the left, because some of y'all look to the left, right? Strictly clues, they say. I'm not a stickler for that, but we'll go with that. All right. So we had a higher high, higher low. That's one. Higher high, higher low. That's two. That's the uptrend on the daily time frame, or the continued pullback on the daily time frame against the overall flow of the market going down. Right now, I was able to buy here. This is my last trade for AUD USD last year. We could officially say last year, right? Really good trade. We make up to the high, took profits. Really, really good trade, right? One and done. So now what's going on? I want y'all to look at this. Do y'all see how price made a higher low, made a higher high at 0.68921, and then we went below 0.66678 to 0.66281? So what does this mean? Right? That's what you really want to look at. It's okay, what does this mean? This means that AUD USD just reversed on the daily time frame, because now the price is switched. The value of price switched, right? I can't no longer say at this point in time that price is good for a buy anymore, because the sellers came in and pushed price down lower. And so since price pushed down lower, I want to be the seller. Now, I am a believer in speaking what you trade. Lower, seller. Higher, buyer. But I'm speaking about a reversal low right now, right? And so now, if this is the case, I want to sell below 0.68921 with the hopes that price will come back down to 0.66281. That's the hopes. Now, this will be a manual trade. And here's why this is a manual trade. I don't have a pending order set up on this pair, right? So this means that this week, if price presents a bearish candle and can stay below 0.68921, I will look for a sell. Now, I want y'all to hear what I'm about to say also. Do y'all also see how I just said I want price to stay below 0.68921? That is also my stop loss. Why is that my stop loss, you may think, or you may wonder, or you may ask? Because if price goes past that price point, which was the highest price before the reversal, then this means that price is going to keep going back up. I am going to be stopped out and the trade is invalidated. I'm done with selling. I need to continue to be the buyer, which means this could just have been a false move in price. Now, remember with the dollar index, I said that price made a new lower low and it looks like it keep going down, right? There's a reason why I'm about to bring the dollar index back up. And the reason why I'm about to bring the dollar index back up is because if the dollar is dropping, right? And if y'all look at AUD USD, meaning dollar, is second in this currency pair, which means that's the quote. They're the ones who are buying the Australian dollar at this exchange rate, right? I need to be careful here. I need to be careful with this counter trend trade. Technically, if I never went up in time frames to see that price is actually in an uptrend. To me, this could be trend continuation, continuing from the weekly and the monthly. But just in case, I still need to be careful, which is also why I'm going to enter into this trade manually to control my personal risk. I'm going to risk 1% in this trade. All right. So when I risk 1%, my take profit is going to go back down to the low. I have a break even point, which is 50% of the way. This is a 2.08 risk to reward trade, as you guys can see here on my position tool. So once price reaches the 1% of this trade flowing from me, then what I'm going to do is move the trade to break even, which means I can't lose money on the position. I'm going to take off partials or half of whatever the lot size that I'm already going in the trade at and let the rest run for me. I banked it. I'm going to bank 50%, let the other 50% run, and I'm done. But if I'm stopped out, I'm only stopped at 1%. I got money go trade again in the day. You see what I'm saying? TMP, once again, I know the trend. I plotted where I want to enter the trade to give me the best risk to reward for myself. And I want y'all to know I like deep pullbacks. Like a woman, she likes to be stroked. Okay? I want the deep pullback. Now, I know some of you guys here may not trade like me, and that's fine, but I'm not a fan at trading from higher highs or from lower lows because I just feel like I will be guessing my stop loss, and I need price to really pull back because I want the best risk to reward, right? So I know what my risk reward is, my stop loss, my take profit, my break even point. I know my risk management, how I'm going to manage the trade from beginning to the end. If I get stopped out, I know what I'm going to do next. I literally just explained the full setup to you guys. If this is something that you've been missing in your own trading, it's something that you've not been able to verify in your own trading, you just got to put the steps together. And they can be simple. I have 3 steps with steps in between. And it's literally in the form of I will do this or I will do this. I'm only looking for one entry. Notice, y'all, how I'm not looking for multiple entries. And I'm not saying if price breaks the zone or any of that. Because I think if you use too much terminology or if you talk too much about the entry and if you overcomplicate it, you may not enter at all. Or you may be nervous after you enter the trade. You could get out early. You could move your stops too soon. Like everything is all about managing the position well. Okay, so let's go to the next currency pair. Now, this currency pair is in correlation with AUD USD because I do like correlations. Correlations are amazing. Positive correlations mean you're trading currencies that move the same. So that's what I like to do. So we're going to go over here to New Zealand dollar. I'm going to break this down really quick on the monthly time frame. I want you guys to notice how this one kind of looks like AUD USD. So for the most part, we moved down, in 2022. Notice the inside bars again, y'all. I pray that y'all see that naked chart. literally almost nothing on there. No indicators, right? Look how price is literally moving. You can see what's going on, right? Bullish move, sellers come back. Bullish move, sellers come back. But the thing about this one is the bullish candles are a little bit bigger than what they were on AUD USD. And that is fine. That is okay, right? But the only thing we really need to do is just break down these few candlesticks that have been going up to really see what's been going on. But price is still in a downtrend. On the monthly, this is the last lower high. Now, if you really want to get a little bit technical with this, um, just to be careful about this one, because technically what some people would look at, especially if you're like a support and resistance trader, you look at this as a retest to the lows, even though it never passed the lows or whatever. So just be careful. Take price at face value and what it's giving, which still may be one of the reasons why I don't like to look left a lot. I really like to look at what current price action is doing. All right. um so I'm gonna read what some of y'all comments really said. Gouda says, I'm sitting here following along and still don't get it. I'm gonna need God. Well, here's the thing. The question is, what part don't you get? The second part, or the second question I'm gonna ask is this: are you new to trading? Right? It's all about a flow, right? And when you're looking at someone's system, especially when you're new to trading, or if you're new to looking at their system, there are things that you're not going to get. You're used to looking at the market one way, you're used to trading it one way. Literally, that's just how trading works, right? I never look at someone's system as to say, I just want to get it right away. No, trading is a concept. Trading takes time. You have to construct it, deconstruct it, build it back up, right? That's how it is. So think about it like that, okay? But if you learn from me, you'll get it over time. It's really quick. Same here, but I like her spirit. Can you look at pound JPY after these? I can. Shaquan is the best. Take her list, and she simplifies this as well. Thank you, Victoria. Hey, Victoria. Happy New Year. Happy New Year. So let's break this area down here on the price chart, right? We got 1, 2, 3 bearish candlesticks from the last 3 months. That's what I really want to break down. Now, on the weekly time frame, I want you guys to look at what's happened, right? We had a lower low in price. Price went down to 0.62. Then price went up to 0.65. Then price went back down. The sellers are still in control here. This is back in July, down to 0.60. Went back up. You see how it's staying below 0.65760, right? Trend continuation, baby. Pulled back up to 0.649695. Lower low again. Wick back down to 0.55197. And I want y'all to see what's happened here. There's a difference here that we did not get on AUD USD. Price reversed here and made a higher high. I'm going to change this to weekly higher high. We have a weekly higher high here, right? Now, we have a weekly higher high because 0.65142 is higher than 0.64695. It's a change in value. Again, change in value talks about supply and demand. The price of New Zealand dollar, you can tell that the sellers kept buying at cheaper prices. But now price has increased and made a higher price. Higher means buyer. Higher means buyer. All right. The thing about this area here is that you just don't know how high price will go. But while we're here, you have to ask yourself this one question. Do we buy high? Like if you're on this weekly time frame, you never drop down. Would you buy high? Some of you guys will say no, because when you're buying, you want to buy low. So this currency pair probably wouldn't even be for you to trade then. And I want you to understand that. That's why I said earlier, some of these trade setups you may not get into, right? Hey Mike, I see you on TradingView. I can get to it after these, okay? And so I want y'all to think about that. All right. But I'm interested in breaking this down. So we're going to break down just this one area right here in the market. All right. So if y'all look at what just recently happened, higher high, higher low, higher high, higher low, higher high, higher low. New Zealand dollar was pushing up really, really beautifully. The last trade I took on New Zealand dollar was back here when she pulled back, staying above 0.60643. And she pushed up One and done trade. Really, really beautiful. Haven't traded her since. But look at what just happened, right? Her last higher low was right here at 0.63018. Then she went higher to 0.65142. Now she just went lower to 0.62298. That is called a reversal in price, a reversal in value. So now the question is, just like AUD/USD, will we see price go lower? We don't know how low price may go, but is this the beginning of the pullback for price to go back lower or pull back? Based on that higher high, we need price to make a higher low to see how low she may go and then go back up again. Once again, trend cycles. I'm going to say something too with trend. I think trend takes a while to master, especially if you're new in the market, okay? Guda, you just said that you're new to trading. Trading can take a year or two to really master. And the reason being is because when you have to really focus on the flow of price, it's not just support and resistance because that's not trend. That's just a level. You really have to focus on the buyer and the seller, where price is, where price can go. It took me a while to master it. I'm still mastering it, right? I'm still working on that. But once you get a process down, it literally does become easier. It's something you have to back test, study, and work on, right? But what I'm looking for now, and it's going to be a manual trade as well, I want to see if we can get a bearish candlestick at my zone. Now, I'm okay if price goes up a little bit more, that's fine, as long as price stays below 0.65142. I'm literally calling out my stop loss, right? For me personally, I wanted to stop, not stop at my stop loss or touch my stop loss, but stay below my stop loss. If it passes my stop loss, well, then that just means price wants to maybe keep going up, continuing higher. And then we just have to readjust this thing. But that just also means that I'm not going to be selling this again. I'm going to be looking for a buy, right? So now, if I do get a bearish candlestick in this area somewhere, I'm going to look for a price to go back down to my low, one and done trade. I have my break even point to where I'm going to take partials. But I will say right now, show you guys something. Just from where we are, I don't think I have a one-to-one here. Actually, we do got a one-to-one. Boom, bam, there we go. We have a one-to-one, a 1.02 risk reward. Remember I told you guys that's what I'm looking for, right? But if price never gave me a one-to-one, I can simply just use a Fibonacci to say, hey, well, this is where I think the extension of price can go. I'll just trade there. But for now, because we have a one-to-one, I'll just keep it here. Hopefully price does push up a little bit to give me a better risk to reward. But I want to show y'all something with risk management. Because AUD/USD and New Zealand dollar both correlate, meaning they move the same, I have to pick which currency pair I would rather trade, AUD/USD or New Zealand dollar. And honestly, I choose AUD/USD. The risk to reward was over a 1-to-2. So I was going to double my profits, right? Just because you see a setup doesn't mean you have to take it. I want you guys to understand that because I also don't know what Tuesday's candle closure is going to be. If tomorrow's candle close is bearish and it puts my risk to reward under a 1, I can't take that trade, but I can still take AUD/USD. This is called cycling out your currency pairs, cycling out your trades, right? We have to be able to qualify our setups as we see them. If you're just trading something as a trader to trade it because you're trying to trade every opportunity, sadly, your feelings are going to get hurt, right? Because if you don't have a good risk to reward, if you don't have a good system that qualifies and disqualifies setups, then you trying to trade everything can hurt your capital. Because let's just say AUD/USD makes it, right? It makes it to my 50% target. And then looking at this one, let's just say that even though it makes it to my TP, my break even point is here. So if I have to move my stop loss early in profit or early to break even, then it comes and whips me out of my trade and I only make a few bucks. That's not a trade I should have been in. But AUD/USD was the primary trade I should have been in. So I'm going to pick the best ones out of my list to trade. That way I'm not over leveraging, I'm not over trading, and I am well within my drawdown limits, right? So I pray this makes sense, okay? Hey Dan, how you doing, sweetie? Goody says, I'm new to trading, but the stop loss, the resistance level, where to look exactly to start at. I think, Goody, you need to ask yourself, do you need to trade support and resistance? I think a lot of traders come into the market and they learn support and resistance because that's the most popular strategy out there. That strategy has been here for a long time. But as you start to get more familiar with how other people trade, even with trend lines or indicators, I think one of the questions you need to ask is this technique for me? I found after 2 years, I don't like support and resistance. I took those things off my chart and I never looked back, right? That may be something that you may want to do once you get more familiar with price. Honestly, I don't like putting new people on support and resistance early in their career. I think they need to look at trend first, then maybe add to see if support and resistance can aid them. That's just my thoughts. That's just my 2 cents. Okay. Yeah, so for right now, this is what I'm looking at on New Zealand dollar. I think it's a really good setup. If price can, give us a better pullback and still staying below 0.65142, what invalidates my trade is if price pulls back and touches 0.65142, then I'm out the position for 1%. Hey Rachel, how you doing, sweetheart? So let's go to the next currency pair. This one's going to be Euro New Zealand dollar. But the way I'm going to talk about this also aligns with New Zealand dollar. Now, I want y'all to notice something. We have New Zealand dollar with the New Zealand in front. We have Euro New Zealand with New Zealand dollar second. This is called a negative correlation. That means that these two pairs more than likely are going to move opposite. So I'm not going to trade these in the same direction. I don't like trading negatively correlated currency pairs in the same direction. That's just a recipe for disaster. Okay. So is Forex market open tomorrow? It's the second. I don't know because it's a bank holiday. Look up on your broker platform that you have a calendar if the market's open. Thank you for saying that too. They may not be. They may be. Look it up though. They have a calendar. Look it up, okay? When you find that answer, let me know, Mr. Hayden. Thank you, Mr. Hayden. So I'm going to take you guys here. I'm going to keep you guys here where we are on Euro New Zealand dollar because this is a tricky pair to trade. But I want you to notice something here on the dollar index. I'm sorry, dollar index on Euro New Zealand dollar. I got dollar index on my mind. So we had a lower high, price made a lower low. Price pulled back, staying below 1.68443. Then it dropped down and made a new low. And then I want y'all to see how price reversed, right? Do y'all see how price changed price values? 1.66567. And then it went higher to 1.67932. That is called a reversal. So downtrend, uptrend, downtrend, uptrend. Downtrend, you sell, uptrend, you buy. But we don't buy high. You need to pull back. Well, price did pull back, but then she went back up. So we have a higher high, higher low, higher high. 1.69949 is higher than 1.67932. But I don't want to buy high. I want price to pull back so we can buy lower. And this is where I want to buy Euro New Zealand dollar, right? I want to buy the Euro New Zealand dollar between 1.66986 and 1.65757. Now, this may be one where I will set a pending order in the risk to reward, a buy limit pending order, and the risk to reward will be a 2.42. Now, this is a beautiful, beautiful risk to reward. So if I sell New Zealand dollar, I want to look to buy Euro New Zealand dollar. Okay, notice how I'm saying that part, you guys. And with the risk to reward of a 2.2, this is so beautiful. And so my stop loss is going to go back to the low around 1.65757. Okay. And if price stays above 1.65757, I'm going to buy back up to the high one and done trade. And once it gets 50% of the way to my take profit, I'm going to take off 50% of my trade and move the trade to break even. So I cannot lose any money on this position. I'm going to risk 1% on this trade as well. All right, Gamaliel, we'll look up later to her. Okay. So once again, TMP, straightforward. I talked about the trend first, where I want to enter the trade, and keep in mind that entries are personal. With my TMP strategy, it's kind of pretty much straightforward and really telling on itself with TMP, right? Once you learn the price action candlesticks. And we literally placed our structure, our estimation zone based on one candlestick, literally. Okay. And so when I see where I want to enter the trade, because once again, remember I told you I'm looking for one entry at a time. I'm not looking for multiple entries. I think also that's a recipe for disaster, because if you look too far ahead in the market, your mind is not on where you want to enter. Your mind is on, or it's going to be where on price could go next, and then next, and then next, and then next. I really believe it's important to stay focused on that one trade, one transaction. If you can stay focused on the one transaction, you're golden. That's the primary thing here. Hey, Miss Kelly, thank you. Wishing you the same success in 2023 as well. So this is Euro New Zealand dollar. The market is closed on the second to third. Thank you. I appreciate you for giving me that information. That's on TradingView, y'all. So make sure y'all follow me on TradingView as well. Okay. I'm streaming on both platforms, and pray for y'all because see me well on both platforms. So let's go to USD Swiss. Now, I actually like this setup. Out of all the ones that we looked at right now, AUD USD, I'm going to give y'all a rundown of my best ones right now. AUD USD is my best setup because we're here at my estimation zone, best risk to reward out of all the ones besides Euro and New Zealand that I just talked about. And then USD Swiss, I love because we just got a recent new lower low. This is trend continuation in our face right now. This is what I love about trading. Y'all, I'm a trend continuation trader. I think when some people don't like to label themselves, and it's fine. I don't like labels either. But when you see a beautiful area like this, I mean, y'all look at this lower low, lower high, lower low, lower high, lower low, lower high, and price made on Friday a lower low. Technically on Thursday, depending on the broker that you use as well. But it made a lower low, right? So this is what I love. This is TMP literally in our face. Trend is down. I know the trend. Like when I say I know the trend because I can see it, that's what makes the system better. High probability trade here. I'm qualifying the trade. One, boom, that's checked off, right? Second thing here is my market structure. This is the highest wick that we had here before, when after the lower low form at 0.93479. So that's where my stop loss is going to go. Lower low, confirmed lower high, lower low, right? Got that part. My estimation zone I'm placing based on the lower high. And so if price can come back up to, and I will set a pending order on this one, if price can come back up to 0.92827, I am going to want to enter this trade with a pending order. I don't want to be around to guess the price action candlestick. I don't want to be there at 5 o'clock when the candlestick closes. I have a high conviction that this trade can work out for me. But if it doesn't, I have my stop loss. Like that's what the stop loss is there. And let's just say that, yeah, price does come and put me in the trade and it moves 50% of the way to my take profit. Boom. I get to move the trade to break even, meaning I don't lose money. So there's no loss in the trade if it moves to break even for me. And I'm going to bank 50% of the profit and let the rest run. Now, the thing about this one is I don't know how low price can go. It's in limbo, right? I don't know how low price can go. But as long as price pulls back, and it may not pull back, but at least I have the setup there just in case. And it goes back to validation, what I talked about earlier. We may not be able to enter all of these trades, or I may not, or you may not be triggered into all of these trades that we are talking about. But the thing about it is, at least you have the setup just in case. And if it's profitable, great, you make money. And if not, always know how much you're going to lose. I'm going to lose 1%. But I got more in the account to come back to trade if I need, right? That's what this is for. TMP strategy, baby. TMP. Know the trend. Know where you're going to enter. Set the pending order. Boom. TMP. That's what we need. So if you have conviction in this setup, USD Swiss, if you believe, because you see this beautiful flow, this is such a pretty area. Trending areas are pretty areas. You don't have to second guess. There's no consolidation, right? There's no need for anything on that chart. But the truth is trending. If you have conviction, you put the trade on. If not, you leave it alone. You don't have to trade this. Everything from one time frame. Y'all see that? All we did was still in a daily time frame, just like Euro New Zealand, daily time frame. No need to break it down any further. Let's go to the last few really quick. This is gonna go by fast, right? So, AUD CAD kind of reminds me of AUD USD, right? AUD CAD and AUD USD also correlates. Okay, it also correlates. Now, all right. So AUD CAD correlates with AUD USD. So if you guys look here, y'all can see how price made a higher high, higher low, higher high, right? So the high point was at 0.91882, higher low price 0.90961, higher high price at 0.93288. All right. Then it made a new low. Price came down, reversed to 0.90432. Naked price action, once again, didn't really need anything on there. Now, if I believe this is a true reversal, I would really love to see price stay below 0.93288. That's it. That's it. Because we went from buying to the sellers coming to the market. Sellers in the market mean we need to sell. We sell high in this industry. We sell high in this game, right? So we need to see if I just got confirmation that the market's going to be closed on the 2nd, so we have to wait till what, Wednesday, Monday, Tuesday. No, I'm still right, Tuesday, right? Now your broker might be open. Mike says his might be open. If yours is open, you're on a different exchange. That's cool. That's great. I'm glad your broker is open, right? But it's a holiday for me, so I'm off. I ain't trading. I like holidays off, right? I don't need to be a trader every day. That's the beautiful thing about swing trading, right? But this is something that I would enter in manually, meaning I have to show up to the market. I don't have a pending order set on this one. And so if I get a bearish candlestick somewhere here, I only trade 4 candlesticks too. I want you to know that. If you're new to me, just know that for me, I only look at 4 candlesticks and they're in categories. If it's not one of those, I don't care about price. But normally it's going to be one of those, right? A hammer or inverted hammer, that's the rejection candlestick category. A bearish or a bullish engulfing candle. In this case, we need a bearish engulfing. Bearish engulfings go at the top, y'all, not bullish engulfings. I just want to put that. Bullish means buy, bearish engulfing means sell, okay? Spinning top, or they're technically a spinning top, right? That's aka the Harami candle. They're the same freaking candlesticks too. And then doji, and then one of those other candlesticks that I just mentioned. Just that. You get one of those, you're golden. You don't need anything else, you're golden, right? So now, if I get one of those, I'm gonna trade back to the low. And guess what? I have my break even, I have my stop loss. And from where we are now, y'all, the risk reward looks favorable, right? If y'all look at the risk to reward just from where we are, it's a 1.99 risk to reward. I mean, come on. And if it goes a little bit higher and then it gives me the candlestick I'm looking for, it's even better. As long as it stays below 0.93288. If it goes past it, I'm not going to trade it. It invalidates my setup, right? And if it invalidates before I enter, I was never in the trade anyway. Come on, right? Once again, that's what we need. That's what we're looking for. We're looking for high quality trades, high probable trades. All right. Let's go to British pound, Australian dollar. I have to go up in time frames to talk about this. I have to go up to talk about this one. It has to make sense. All right. I'm just going to talk about the recent area where we are now so y'all can follow along. So the Australian dollar and pound AUD typically sometimes move opposite of one another. These are also two currency pairs where sometimes I don't like to trade them together because they are negatively correlated. Not all the time, but sometimes. All right. Now, what you guys will see here is that in October, we made a new high and then price declined. She pulled back. But then she made a new high again recently in December. So we went from 1.81965 down to 1.74611 up to 1.82757, creating a new higher high on the weekly time frame. Higher high. Oh, price went higher. We're the buyer. Y'all see that? What you speak is how you trade. Okay. Simple. Everything is about price direction. Everything is about trend. Nothing else. Okay. So I have my estimation zone set and I know where I want to enter the trade. I want to talk about this. Now my stop loss is already automatically at the higher low, 1.74611. Why? Because that's the last higher low. That's where price just came from. That's where the last bulk of buyers just came from. So of course, naturally, we, me, you, I should want price to stay above 1.74611. That's what price is. That's exchange rates, right? So if we drop back down to the daily time frame, now as you guys can see, because I want to explain something, price is below. I had a zone based on the weekly time frame. That's this blue zone here. Like I just got my higher highs and higher lows from the weekly time frame. I think whenever you're using more than one time frame, color code what you do. Okay, but price is below my weekly zone. This does not mean I am the seller because once again, like I just said, look where we just came from, 1.73361. That was the last bulk of buyers per the weekly time frame. I'm sorry, 1.74611, right? So that's where the stop loss is. If price passes that, okay, cool. We're in the downtrend per the weekly time frame because that's where the information is at. Now, because price is past my zone, I also have one more zone set up. And this is like the last frontier for buying. This is something that I like to teach as well because I'm going to show y'all something, a little trick here. This one candlestick here can be broken down, which is why I don't trade support and resistance or trend lines. I love price action candlesticks. Like I love trading candlesticks and using them as structure. We can break this down because if I was a weekly time frame trader, which sometimes I do take trades from, then I will already be in this trade and my risk reward will be a 1.19. And remember what I said earlier in the beginning of the video or the session? The higher in time frames you go, the longer in trades you may be. Sometimes in trading, we want price to come exactly where we said we wanted to enter. We'd enter, and then price goes past it. We're in the trade, and then we go into drawdown, and we think we did something wrong. No, sometimes price has more to go. That's why you have a stop loss. That's why you give yourself this cushion for price to move just in case. And you have to hold this steady conviction that, oh my God, if I'm in a higher time frame, I may be whipsawed, right? And that's what's going to happen from time to time. But you can break these candlesticks down. This is literally a price range. Also, remember what I said in the beginning of the video. If you analyze the monthly, weekly, daily, and try to trade on the 1 hour, 15-minute, this range, your world is going to be rocked. This one candlestick represents 371 pips, which means you don't want to enter this something like this any lower than the daily time frame because you need the risk to reward to match up. You need the pullback to match up with what you're going to do. You want this trade to be as simple as possible. Okay. So when I go down to my daily time frame in that one candlestick broken down, if y'all really look at it, higher high, higher low, higher high, look at this candlestick that we have right here. This is a spinning bottom candlestick. I like this candlestick. A spinning bottom is a candlestick that has a candle body in the middle of two equal wicks on each side. It's a tell-all candlestick as well. Remember, that's one of the four categories that I just explained, right? And so if price comes down to this candlestick, and if I set a pending order, which I may end up setting a pending order, y'all look at this risk to reward. It is beautiful. 3.05 risk to reward. I mean, y'all think about it. You're going to risk 199 pips to potentially bank 609 pips. I mean, the first year, if this works out, if this trade works out, you get to go to your friends and say, yo, I just banked 609 pips on pound AUD. Now, why is it that you can bank 609 pips on pound AUD and have a 199 stop loss? It's because the price range, the range from the next cent, $1.75, $1.76, $1.77, price moves 100 pips on this pair really, really fast. And because this is the weekly time frame, you may be in this trade for more than a week. So this would be a swing trade you would have to hold. Okay? Have to hold. Do you do monthly? Yep, I do payment plan, sweetie. Yeah. We'll talk about that later on as well, too. We'll talk about it later on as well. All right. Hey, Miss Kelly. You simplify even more. Bravo. Thank you, Gamma Live. You know, I've been working on it for the past few years trying to coach this thing up. Trying to be a good coach. You know how I do. All right. So yeah, so I got to take profit in here, got the stop loss in here, break even point, 50% of the way. If it moves 50%, we move the trade to break even. We take off 50% of the profits and we let the rest run. I am risking 1% on this trade as well. So if AUD USD drops, pound AUD goes up, that's better in our favor, trading two negatively correlated pairs. Prayfully, they work. Prayfully, right? So, New Zealand dollar Swiss, go over this one really quick as well. This one is trend continuation too. We're gonna stay here on the daily and then go to our last two currency pairs. So price had a lower low, lower high, lower low, right? So downtrend, low, 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 lower low, lower high, lower low. Potential new lower high being made somewhere in this area, right? So price pulls back, stays below 0.59645 because that's where price just came from. That's your last lower high. Then we want to see, this is just my personal take profit. I want to see price come back down to the low, 1.86 risk to reward trade. I can set a pending order on this, risking 57 pips to gain 107 pips. Have my break even point 50% of the way, and we're done. Do y'all see how quick that was? If your analysis, and I hate saying it like this, but I have to say it like this, if you spend too much time on analysis trying to break the pair down to its most intimate time frames, you're gonna probably be over analyzing. And that's the last thing as traders we want to do. You don't want to over analyze this. You want to make sure, especially if you're a swing trader and you know you're holding the trade for more than 24 hours, that it aligns with you having to hold the trade for more than 24 hours. It doesn't mean you're going to hold the trade for 2 to 3 weeks, and especially on this thing doesn't even have to pull back that much. But we are in a little bit of consolidation. But that's fine. That's okay. I don't mind seeing consolidation on some pairs because that just once again says you're not going to be in too many trades at one time. Especially if you're trading a prop firm and you got that 3% drawdown limit, daily limit, or that 5% daily limit, right? You want to make sure you're not overextended in your account. Okay. So, last one that we're going to go over is Euro USD. Now, decided to construct analysis with y'all so y'all can see how this works when you don't have a trade. All right. All the pairs that we just went over, we went over it because one, price is trending, or two, price reverse and is close to an estimation zone. I like pairs that are close to my zones. If price is not close to my zones, I don't want to look at it. I don't want to trade it. And you shouldn't either. No matter what you trade, if you got to sit there and play your Game Boy, your PlayStation, your Xbox, waiting for something to happen, or go take a ride in your car, waiting for something to happen, that means that you don't need to look at that currency pair. You're letting another one pass you by that has what you need. Okay? But let's look at this. So the dollar index and Euro USD move opposite of one another, literally opposite. All right. The dollar index just made a new lower low. Now, on my broker exchange, Euro USD has not made a new high. Your broker exchange may say something different. I'm not on that one. I can attest to it. I just know 8cap a little bit wanky sometimes with how they have their price action, but it's okay. But we have a higher high here. Last higher high here, higher low, higher high. We have not made a new high yet, okay? Which means prices are in an uptrend, but I don't have an entry point at this moment because my entry point would actually be somewhere down here for me to take this trade. What I am waiting on is one of two things. I'm either waiting for price to make a new high so I can update my chart. The word update is key here, okay? When you update your chart, it means that price action changed and you're adapting to it. So if price makes a new high, guess what? The lowest wick here becomes my new higher low because now we have a new higher high. So we have a higher high, higher low, higher high uptrend. We're the buyers. We're going to need price to pull back. But if price starts to pull back, I'm on my hands and I'm waiting to see if price will stay above 1.04468 because that means there's been a change in the dollar index that I need to pay attention to. Okay. So this is not a qualified setup. That's why y'all see it's in my near future category, because I'm going to be watching this to see if price has made a new high. All right. So these are the pairs that I am looking at. The ones that I really like, I'm going to say again, I really like AUD I like this one because of the risk to reward. So I'm trading risk to reward and priority together, but more so risk to reward over this one. The other one that I really liked was USD Swiss, because USD Swiss is just so beautiful. She's trending lower lows and lower highs. There's no reversal here. I like this setup. Beautiful. I've not traded USD Swiss in a while. So the fact that she's giving an opportunity now sits well with my soul. What's the other one that I really liked? Another one, Pound AUD. I really like Pound AUD. Very beautiful risk to reward, 3.05 risk to reward. Gonna set a pending order on this one. Once again, like I said, you guys, only risking 1% per pair. All right. I have my break even rules, and then I'm good from there. All right. So let's go into a few other things really quick before I answer y'all's questions if you have any. So my trading view strategy overview. Like I said, I like pretty areas. I like to qualify my areas as well. But I'm doing all of this without using support and resistance. I'm doing all of this without using trend lines or any indicators. I use to trade those things. I don't think there's anything wrong with those if you make them work for you. It does not work for me anymore. It hasn't worked for me in the few years that I've been trading. What I have works well for me, and I really do enjoy trading it. It's very simple. My risk management strategy is straightforward as well. If you decide to use my system, you know your take profit, you know your stop loss, your entry price, your break even price, and your risk percentage all before you enter a trade. I have found that traders struggle with most of all of this, right? One of the biggest things I find that they struggle with when I do consultations is the entry and where to place the take profit and the stop loss. Those first three things are what makes us traders, because we're here to win. We want to make money. That's what we're here for, to make money. But it's a puzzle that we got to put together. Putting together this puzzle isn't as hard as you think it is. I promise you it's not. But putting the puzzle together has to come in a simple ordered flow. And once you know the ordered flow, your trend, your structure, and your price, right? Then you know, okay, this qualifies me for entering a trade. That doesn't mean you're going to have a trade every day or every week or every month. But when the pretty area comes, as I've said, I've not traded USD Swiss in a while, but I will. I've not traded AUD USD in a couple of weeks, but I can, because they're setting up. And sometimes y'all got to wait for those setups. Patience is a virtue in our game. Now, my strategy is for you is for a few reasons. If you want to be an expert, I remember when I was coming up years ago, the first 2 years, I would put other people in my shoes, right? I would have my analysis and I'm like, oh yeah, I got my analysis, but they said this or they said that. And what would happen is I would look at them, change my analysis to these people's, and then my analysis was the one that panned out and theirs lost. And I kept doing that over and over and over again. And it put, like, my confidence was shot. But then when I realized, hold up, if I stop doing what they're doing and focus on me and what I believe can happen, have a conviction on something, this may just work for me. And that's what led me to doing my own thing, not thinking like other people. That was the best way for me to trade. And if you want to be a better trader, if you're tired of the traditional ways of trading, having to look left, look what happened in 2005, look what happened in 2006. Well, what about what happened today or just last week? And how can that affect the way you trade today or next week? Then this may be an approach you may want to look at. All right. And to be able to trade on your own time, y'all just saw where I'm saying I'm setting pending orders. Why am I setting buy limits? Why am I setting sell limits? I'm setting these limits so I don't have to be there to trade. I already did the analysis. Now I can just set these orders and go about my day. Either the trade will work out or it won't. But maybe 50% of the time, I'm going to be in those trades anyway. So I might as well get it over with. Fight for the best price. I'm fighting for the best risk to reward. Because as I stated, that candlestick can change your risk to reward. drastically to where you may not even be able to enter the trade anyway. And I've back tested this, and I've back tested with my clients almost every single week to know that pending orders work. Okay. Now, I'm glad that Guda asked questions. He asked me about payments. So, you guys, I'm one of those people who like to teach upfront. I'm not a big believer in courses. Years ago, I used to sell courses. I was like, you know what? Why would I sell a course when I can talk to the people directly, just like how I'm talking to y'all? So, y'all have two options. You can work with me one on one, or you can join my community and you can literally trade with me and chat with me the same way we just broke these currency pairs down. Do this with me on a literally a weekly basis. So work with me one-on-one. I like to call that the fast track. If you work with me one-on-one, I am literally in a Zoom room with you, me and you. I am teaching you how to trade my TMP strategy step by step, and literally in 2 to 3 weeks you will know how to trade it. That's the beautiful part about talking to a coach. You're not looking at videos. You're not looking at a course. You're not trying to figure out the information by yourself. I am literally handing you everything that you need with assignments, showing you how to study, showing you how to back test, and even helping you learn how to pass prop firms. I've passed multiple this year. I failed multiple this year. But guess what? You still keep going because that is trading. I've helped people pass prop firms this year. They still have their prop firm accounts or they're passing prop firm challenges. And that's the power of having a coach who can assess with you. And that's exactly what I do. So that's the 6 weeks. And if you want to come into my community, you guys, it's 187. There's a 3-part module course that you guys can work on the strategy, the TMP strategy. I'm not involved in that, right? I'm not walking you through it myself like I would my personal clients, but you can still come in and learn it, right? Every single Sunday, just like how we are here today, we do this right here, what we're doing. We profit plan. We're looking to see what trades we can take, how much it can make us, how much it can lose us, and what it can look like for us holding these positions. Okay. Also, we do live trading. Like I told you guys in the beginning, in December, I started back scalping, and oh my God, I love scalping TMP. I scalp S&P 500. It was US 30, but this is why having a coach is important too, who knows how to maneuver. I found that US 30 has, like, if you look at NASDAQ 100, S&P 500, and US 30, they move similar. Like if you look on the higher time frames, they move almost similar. But there's something that US 30 does that's detrimental to a trader, especially a trader like me who likes deep pullbacks, right? And so what's happening was I found that S&P could be still trending where US 30 was even false breakouts and then going our way. And I said, hold up, I'm switching to S&P 500. And the results have been better ever since I switched. Still using pending orders, by the way. And so I allow you to come into the trade room with me. You get to see how I trade. You get to see how I maneuver. And if you have the conviction and at your own risk, you feel you want to put the trades in as well, that short trading range, you can do it with me. Thursday, we back test. If you do not know what back testing is, that is literally the art of studying how the market flows with your systems that you are learning. That's also where I go into reversals. I go into trading different time frames, such as the monthly, putting it together, the weekly, putting it together, the daily, putting it together. I don't think some things you can learn in a course. I think sometimes you need to be talked to and have the information talked through. That's why I do everything live because I just really love talking. That's one. But I literally love teaching. I love seeing those aha moments. And you can't get those in videos. You can't ask the questions in videos, but you can when you have a coach who you talk to. And I do performance evaluations with my students who do prop firms. Okay. So that is the biggest thing there. Whether it's your own money or prop firms, I think it's important to have someone there to go over your numbers with you. So I'll give you guys an example. The reasons why drawdowns are very important, your drawdown limits, I think prop firms are smart for teaching you this. To have a drawdown limit means you need to adjust. If you ever go into negative drawdown, you have to adjust your percentage, how much you're going in at these trades, right? If I lose 1% and I go under my original balance, something, it's not that something tells me to stop, but something may say, okay, you lost, reevaluate, right? before you get into the next trade. If I lose 3% myself, I'm going to decline my risk percentage, right? Instead of going in at 1%, maybe 0.75 or zero point 0.5 until I increase it. But what happens when you have positive equity on your trades? That's something that has to be talked about a lot more. You need positive equity in your positions, right? And especially when it comes to withdrawal. I know some people want to withdraw all of their money out of prop firms. I don't think you need to. I think you need to trade with positive equity. The prop firm we trade with makes us trade positive equity. And to be honest, I like that more than any other prop firm out there because they're a little bit more on a professional standard, if I'm going to be honest with you. So that's 197 a month. I mean, to get that for 197 a month instead of paying a really big buttload of money, like for a course and then the chat and then this and then that, and to have someone work with you, honestly, you can't beat either of these prices. Okay. So that's that. So I want to thank you guys for coming here too, because y'all could be at home, right? With your families, you could be doing whatever, but you're here listening to me talk to y'all about charts. But that just means that you're taking your trading journey very, very seriously. All right. So what I'm going to do is answer a few of y'all's questions after I take a sip of water. I'm going to answer a few of y'all's questions. Make sure you're following me on YouTube and make sure you're following me on TradingView as well. So let me get to y'all's questions, okay? I'm on TradingView and YouTube, so I got to go through both. Good asked me, do you take payments for the one-on-one? Yes, I do. So we do negotiate the payments, right? So you and that's the thing about working with me too one-on-one. I don't take everyone as a client. I choose who I take on as a client. I have to make sure we're a match. Before you and I decide to work together, we're gonna get in a private Zoom room and we're gonna talk. I'm gonna ask you about your trading journey, see what you need. And if I feel like it's a good we can a good balance work relationship, then we'll move forward. And then you set the payments up, we'll divide them within the 6 weeks, and then we go from there. And you will be a private client of mine for those 6 weeks. So yes, I do. Please go to her website and get answers for her program and more. Hope it says thank you. I appreciate that. Mm. Earlier, someone asked me if I could look at pound JPY. I definitely can. And then someone asked me about CAD Swiss and then US 30. All right, so let me go to my other portfolio and pull this up. So pound JPY. All right. Where you're asking questions too about currency pairs, if y'all need help with currency pairs, if you have a question, make sure you go ahead and put it in the chat really quick. Tell me what you want to know about the pair, right? Like, what are you looking at? What are you looking for? That will actually help me navigate how or what I need to touch on to make sure I answer your questions. Another reason why I'm saying like that, I don't think analysis teaches, I think analysis shows. So there is a difference, but I will go ahead and break this down for you. Okay. Let's start on the monthly time frame here really quick. So on the monthly time frame, I'm just going to do this really, really quick here. There was a higher high, higher low, higher high, higher low, higher high. But then price came and she actually passed 148968. She took out all those lows. And then she went higher. So this is what we have now. We have a higher high, higher low situation. So technically, if you looked at it on this time frame, price is still bullish, right? It's still bullish. I'm going to say that with more conviction. It's bullish. And then if you go to the weekly time frame, I mean, you can't argue with the fact that it's still bullish. I mean, you have a higher high, now higher low, higher high. It's still bullish. You can't argue with that fact. So if price stays above 148.820, we're still in bullish form. But if she drops down below that, then we're in bearish territory. But let's go ahead and look at the daily time frame. Okay. So in the daily time frame, looking at where we are now, if we break this time frame alone down, I'm just gonna go to the left just a little bit. We had a daily higher high, we had a daily higher low, higher high, and then price came and made a lower low, and then that's the reversal. All right, that's how we talked about that. That's the reversal. We didn't go past it until just recently, so then that makes this a lower high. So lower low, lower high. Oh, this is interesting. Look, lower low, lower high, lower low. Listen how I'm about to explain this, okay? I just showed you guys on a monthly and weekly price is bullish. On the daily, price is pulling back. What does this mean? What this means is this. This is a pullback against the bullish move, a retracement. Okay. So if you sell this, which if you trade current price action, just hear me out. If you trade current price action, because we don't know the stopping point of this pullback, but you will actually have a good setup here. This is interesting. So I'm going to change the colors. Remember I told y'all, whatever time frames you want, change those colors. So lower low, lower high, lower low. If you set a pending order, if you feel this is a trade you want to be into, let me say that. Okay. You set a pending order to 160.24 around that area. Your lower low will be, or your stops to be back to the high. Where we are now, you have more than a 1-to-1 risk to reward to 1.15. Now, price might go lower and then pull back, giving you a better risk reward trade that could be greater, right? Depending on how far price pulls back. And then, so yeah, I like when price goes down then pull back. I like that better because you get a better risk reward. But for right now, this is where we are. For right now, this is a TMP trade setup, baby. Right there, just that fast, in your face, top down analysis. That is what that is. Hey coach, can you send your GA chart? Yes, Kurt, I can send it. I'll put it in our group chat. Okay. So that is it. All right. Now, the thing to be careful with though is this. All right. So that's a lower low here. Price could have a little bit more to go as far as the daily time frame is concerned, and then maybe price going back up. I send it tomorrow, Curtis. I send it tomorrow, Kurt. Because after this, I'm eating. I got pot roast. Okay. She has a little bit more to go, but I think this could be a really good quick trade setup for you guys if you're looking for something quick, if it fits the analysis. But if price passes 162.337, baby, we're going back in trend continuation. I would not argue against that. Okay. She's still bullish. So this is a counter trend trade. And honestly, with counter trend trades, be more careful because counter trend, I'm telling you now, counter trend trades don't work as much as trend trades do. Do they work? Yes, they work. But just be careful. But I like this. Really good setup. I got asked to also look at Cat Swiss. Mike says, I'm pronouncing your name. It's either Mike or Mick, but I'm gonna call you Mr. Rogers. Hey, Mr. Rogers. Looking at a nice field setup. I just want to see what you think yourself. Thank you. So I trade fields, maybe not like you. I don't trade field levels. I'm gonna just put it that way. Only negative 27. All right, but I can look at it. Oh, yeah, I can look at it. We can look at it. Yes, we can. Never any harm in looking. All right. So this is one that I was in actually. I had a pending order set. I got out of it. This looks better on a lower time frame. I'm gonna go down to a 12-hour. I decided this year that I won't trade my 12 hours since I've picked up scalping. But I'm gonna talk about this anyway. So one of my students, Micaiah, I hope she's still on here. She talked about Cat Swiss. She actually called the trade out in our community on a daily time frame somewhere up here, and I was able to get in a really beautiful trade. Made me a few $100s. Thank you, Micaiah. So yeah, so shout out to my community because they be coming through with them trades. So shout out to them. And we don't even trade a lot, but I love the fact that when we see good setups, we're able to call them. Beautiful, beautiful, beautiful. So as you can see here, price has a lower low, lower high, lower low, higher high, right? And so with that, the higher high, that's the reversal stage. Now, if price stays above 0.67556, this could be a really good trade to take back up to the high. I mean, you really didn't even have to drop down to see that, right? Lower low, lower high, lower low, higher high, right? We really didn't even have to drop down. That's why I'm talking about top down analysis. Sometimes you don't even have to drop down to see these trades. I think this is a really good setup. Micaiah, I hope you're looking at this if you're still trading this next year, this year. But risk to reward, if it works out, is a 1.5. This is a beautiful setup by itself. So yeah, lower low, lower high, lower low, higher high reversal, risking 47 pips to gain 71 pips. One and done. Beautiful setup. She said she's still here. Hey, baby girl. So yeah, beautiful cat Swiss setup. No, I don't need a Fibonacci on that to see that that works. Okay. So yeah, I like this setup here. If y'all have in the chat, hey chat, I see it's 33 people here. I don't know how many people are in Trading View because I see it's people talking, but Trading View tripping right now. But if y'all got questions, let me know, okay? I also got asked about US 30. I'm trying to find it. Can I touch on US 30? I can touch on US 30. Is it in my indices or did I take it off? I think I took it off. US 30. All right. So the thing about US 30, oh, I still got the analysis on. All right, look at US 30, okay? So the thing about US 30 is that she has been consolidating. This is something I would not touch as a swing trader. But higher high, higher low, higher high once again, and price made a lower low here. Now, this is a reversal. For the most part of the year, or actually for this full year, US 30 has been in, well, most part, has been the downtrend, right? The fact that we have this reversal here, and there was another one here, and then price made a new high. But once again, that's a false breakout. And that's how we have to, as traders, learn how to adapt very, 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 very quickly. The fact that price is reversing, I would not touch this as a swing trader because that's not pretty. I don't want to get whipsawed out. You should not want to get whipsawed out or have to hold a trade where you don't know where it's going. Because one of two things can happen. Price can pull back. Now I have my estimation zone set where I have my estimation zone set. So I would really love to see it pull back to $33,900 to stay below 34.9. And if it can, potentially come back down to this new low, maybe even lower here. Okay. Maybe lower to 30,424. But this is the immediate take profit. But what happens if price decides to just keep going down? What then? What that means is that you're going to have to update this chart. You're going to have a new lower low, and this is going to be where the top wick is your new lower high. And so you will have to update that. When price consolidates, leave it alone. It's paused. There's no reason to look at it. Let it go. We just spotted other things to trade. Go trade those. They're showing their hands. This one is not, but it's pretty still, but it's just not pretty right now. Okay. So that's how I'm looking at US 30. No bueno for right now. Let her do her thing. Let her move more. All right. Does she correlate? I just got asked, does she correlate with the dollar? She correlates negatively with the dollar. So, yeah, she correlates. They do not move together overall. They actually move opposite overall. Okay. They move opposite. So that part there. Um says, ooh, your US 30 sell spot is the same as mine. Hey, that's what I'm talking about. That's what I'm talking about. I like that. Great minds think alike. All right. So yeah. So any other questions, you guys, before I go? It could be about currencies, the program, working with me, or maybe you need help for yourself. I know TradingView and YouTube lag behind sometimes, so I'm gonna take a sip of my water and see if y'all have questions. If y'all don't have a question, then we cool, and I'm gonna go eat my pot roast. I dropped my top. It went somewhere. I don't know where it went. And hopefully, if this is your first time joining me, prayfully you guys enjoyed the session. This is what I do. I love teaching. I love talking. I love just the markets. It's a big puzzle to figure out. And I love figuring out this puzzle. I wasn't good at figuring it out when I first started. But now that I got my system, it works out better. And I think once you have your system, man, it makes it easier. I'm not saying that trading is easy because it's not. Y'all all know we go through our drawdown limits or days. We go through our losing periods. We go through our winning periods where we're high on the sky and this feels like we can't come down, right? But I'm gonna be honest with you guys. Like, I talk to my students a lot. We talk a lot about psychology, and I think if you can weather through those losing periods, you appreciate the winning periods so much, right? The last few couple months have been great, but it's like, man, you get punched a few times, but it's okay. Like, I'm a gamer, and as a gamer, if you die in the game or you lose, you keep coming back. That's how I feel like I do the markets. I think playing video games toughened me up. So, it is what it is. All right. Um, Open Crown. Hey, Open Crown says my first time here. Thank you for coming in. This your first time too. Hey, gonna look to do more with y'all as well. Hey, Mr. Anthony. He said awesome. I missed your face. Miss Suzette says very informative. Thank you, and thank you for being here. Micaiah says this live was amazing. Work for the books for sure. For sure. Also too, I'm gonna download this as well and get it for you guys too, Kaya. So this will be our first analysis session for 2023. I put it in Think of It after this, okay? So y'all on YouTube, if you want to get in contact with me on YouTube, y'all can email me or head to my website slfxtrading.com. If y'all need to get in contact with me, you can email me, you could chat with me there, you could talk to me on TradingView. Y'all can hit me up in my inbox if y'all have questions. Just be careful, because if it's about analysis, I try to be careful about answering analysis questions, because if you have an analysis question, it also means you're questioning something in your system. And we got to be careful when we talk about systems, because don't assume everybody trades the same way you trade, because they don't. All right, don't assume everyone trades the same technique or time frames, because they may not. Right. So it's always important just to start the conversation first. Okay. As I tell my people, and I would tell you guys, I love you guys. All right. I pray y'all kick this year's behind. Be profitable. Go for it. Go for your opportunities. Don't shy away. A missed opportunity is your best opportunity. Okay. I pray y'all have a good night. I'm about to go eat my pot roast. All right. And y'all have a good one. Good night, everybody. Be blessed.